Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Lynn & Associates with your agriculture update for this Thursday. And we're at the 3rd of August, 2017, and we're getting on right now about 2:55 p.m. As you can see, a down day in the greens with the beans getting hit very hard. And the reason is, in a lot of key areas now, they're saying that they're going to be getting more moisture that is needed in some of those areas to make the beans. So I just was talking to people that ranch in the Dakotas where it's been very dry, and their beans are looking good. They're not tall, but they are definitely filled out. The pods look great in them, and that's a big change from where the market was just a month ago. So big changes there. Through the Midwest, we're seeing the same thing as well, and as you look at these grains right now, the chart picture keeps getting uglier. The dollar down a little bit. The breaking news that just happened was that the grand jury panel has been impaneled by Mr. Mueller, the special counsel, looking into Russia and whether or not they were colluding with the president on anything. So that's a next step. It does not mean the president's done anything. These things work this way. That gives the special counsel, if you will, the power to subpoena, get more records, blah, blah. It just means that he's moving along. But that's still not going to be a bullish thing for the marketplace, and that's another factor we just look at on everything. As you can see, I'm still saying you've been in this upthrust from $9 to $10.27 3/4, but without question, what we had was on the weekly chart an up, then you came back, you made a higher high, closed lower, and since that reversal, the market has really let go to the downside. Now, when we go to an area chart of daily closes, that's all it is, you can see how this market is now down roughly 83 cents. And that's a heck of a break that we're getting. There's on the thrust here, the market coming down. Now, I know some traders probably bought the market right at this number on the gap. And trade likes to fill gap. And as you could see, I don't know that they got hurt very much on that. We'll find out if it can do them any good. But the gap on the chart has been filled. And when you fill a gap, some people think that that's a sign where the market stops that decline. I don't know about that. I'm still wondering if we're going to take out these lows right here. That's what's going to be more interesting to me. When I look at the work on the swing line's bearish. You've got a clear pattern of lower highs. You got lower lows all the way through. The market's under the 18-day average. Now, it's challenged for the first time the 100-day. If I take this off, you can see what I mean by that. Hadn't quite gotten down there. And yesterday I was wondering, would it get to that? But now you can see resistance, theoretical support, and you went through that number and you closed under it. Okay, that doesn't scare me either. And the reason is, generally, when you get right over the 100-day average, it has a hard time holding. It didn't in this case, but that's generally. Now it's back under it for the first time in a very long period since the beginning of, well, the end of June. And we'll find out if this was the short-term period of it over it and the market's just going to hang there. I don't know. When I look at where the market's at in relation to the Bollinger Band, well, there's things here I do know. You closed under it today. The band's 962.5. You finished at 960. So only 5% of the time do you stay under or over a band, and this is the beginning of that process. You're oversold as well. Now, if it were embedded, I'd be a lot more bearish than I am. Embedding means you convert from oversold to locking in a bear trend. You haven't done that. So I think this is an area where people are going to say, okay, maybe the market has fallen enough. We don't have any sign of that on our work. What we have is a downtrend, downside bias, but an oversold condition. In the meal market, we have an oversold condition. You are riding the lower Bollinger Band. This is not the first move under that 100-day average. It's now, I think, the third. And the market's going to have a heck of a time getting back up and looking good unless it gets a real weather problem going, and I'm not seeing that on the charts. Finally, soybean oil's capitulating with all, and it now has got itself lower highs and lower lows. Now, yesterday I said this is going to be a very important day in soybean oil. If you get under that low, you could end up then with the lower highs, lower lows under the 18-day average. It's exactly what occurred. Where could the market go? Right into this area if it wants to find support down there. Momentum's still pointing down and you're not oversold. If you rally, look for battleground at the 18-day average of closes. In the corn, you're trying to convert the market from oversold to locking in a bear trend, which will call into play potentially the 371 area. It's only 6 cents away, but that brings that into play. If you take out 381 and a quarter, that could be important because you've got both numbers today in the slow stochastic under 20. Day before they were under 20 and the day before, so you've embedded. So if you get over that number and you don't remove the embedding, it's a good sign that the market's still very much locked into a downtrend and probably wants to come down further. Remember, when you get an embedded reading, it takes over everything on the chart. Same thing's happening in the wheat. Look at how the wheat market's got an embedded reading, just coming on down. It's now challenged 3 days in a row, the 100-day average as well, but there's nothing friendly on that chart. In the sugar market, prices rolled over in terms of momentum, pointing down. The market's low today took out a previous low. So if I remove that from the chart, you were in an uptrend. But if you take out 1412, which you did, you negate that. So what's going to probably happen is this market's going to trade within this black band for a bit here and just churn, if you will. Coffee market's got the embedded reading and it's trying to ride the upper Bollinger Band. That is all bullish. Even though you don't have the swing line pointing higher, it's got no trend. You got a higher high and a lower low. This takes the precedent, and when it locks in against that upper band, that's important. Now, pullbacks will likely see support into 135.30 area. Keep your eye on the embedded reading. As long as it stays in place, I say people will be buying it. Lose it, that 18-day average comes into play. In the cocoa market, take a look what's going on here. You've got both numbers over 80, both numbers over 80, both numbers over 80. So there's a theme. We've got cocoa and coffee pointing to the upside embedding. What's the U.S. dollar been doing? Weak as can be. Probably has something to do with that in terms of trade. The cotton market, overbought, but riding the upper Bollinger Band, a small break in the market today, but certainly nothing to write home about. Nick, thanks for writing me about the cattle. He is right. The volume on the Dees is much smaller than this. Now, what I watch on my own work is different than sometimes what I even put up here. So we'll go back to the October cattle, which has about 3-4 times the volume and open interest. And as you can see, you've got a lower low, a higher high. The market ran into problems at the 18-day average. It's exactly what we like to see. You were oversold. You're working that off. There is no trend to trade in this market. In the September feeder cattle, you got a lower low and a higher high. Nothing I can do with that either. And notice it's 3 days in a row against that upper Bollinger, against the 18-day average of closes. It's looking for something. That's all. In the hog market, you're so oversold, I can't make a recommendation, but I can tell you, keep your eye on the 18 and the 100-day average. You're about to get a bearish crossover, which often leads to even lower prices than this one. That's at least my theory. Doesn't mean it's right, but that's what I look for. So tomorrow on rallies, I wouldn't be surprised to see a lot of trading against that resistance if it gets up there. The oversold part's the scary part to me, and there just isn't a lot that I like to do when you get those type of readings. Getting back to you, gold gave up the little bounce just now that it had off that grand jury announcement. So, and the stock market has come back. So, as I said, it doesn't mean anything other than it's moving along. I wrote my gold report, and I'm going to start releasing it for the general public today. My subscribers, paid subscribers, have all got the report in their hand. They're first. After that, you can get this report. So look for it to start coming out. If you're not on my list, you're not going to get it. It's that simple, and I do cull my list. So you'd be very wise to go to our website and re-sign up if you want to get this report. You can always call us at 866-973-2077. You can click up here. You'll see if you're watching me on YouTube an icon. The forms will appear there. And again, you can always, underneath us on some websites, it says click here for Ira's free information. do so, and away you go from that. I'm Ira. You have a great day, and I'll see you tomorrow.